Hi, I'm Tara Saprony. I'm the branch manager at Evanston office, and I've been with Western AgCredit for over 23 years. I'm here to talk about the financial information you will need when you start a borrowing relationship with Western AgCredit. So first, when we start a new relationship, let's get to know each other. Western AgCredit. The first step in building a relationship is understanding each other. So let me give you a little bit of an outline of the history of what Western AgCredit is. Western AgCredit is a borrower-owned cooperative that is part of the Farm Credit System, which was established by Congress in 1916. Congress set up the Farm Credit System to specifically address agricultural needs only. The Farm Credit System has recently celebrated 100 years. Western AgCredit's mission is to provide the most dependable source of credit and related services to agriculture and the rural community. That's important to us. That means everything to us, and it's what we live by. So let's talk about a few factors about our mission: to provide the most dependable source of credit and related services to agriculture. Dependable credit also means constructive credit. When we are looking at a lending relationship, we are there about making sure that we have longevity of agriculture. Let's also talk about what we stand by, the cooperative mission. There are 7 cooperative principles: voluntary and open membership, democratic member control, members' economic participation, economy and independence, education, training and information, cooperation among cooperatives, and concern for community. Western AgCredit is owned and operated by the farmers and ranchers who borrow from us. The directors are elected from our membership group. Our members contribute equally to and democratically control the capital of the cooperative. This economic participation is established through our membership stock. Western AgCredit membership stock is contributed by 2% of the loan amount up to a total outstanding Western AgCredit stock of $1,000. Let's talk a minute about the stock with Western AgCredit. When first establishing a loan with Western AgCredit, your loan amount will be increased by 2% to cover the loan amount that covers up to $1,000 worth of capital stock. Your capital stock is retired when you no longer have a lending relationship with Western AgCredit. It is refunded back to you. So let's start out with a smaller loan. Say we'll start with $10,000. $10,000, including 2% stock, you would have a loan amount of $10,200. Let's talk about a $100,000 loan. 2% of $100,000 would be $1,000. However, if you remember, I just said that we cap out our Western AgCredit stock to $1,000. So Western AgCredit cooperative stock is 2% up to a total of $1,000. Since Western AgCredit is a cooperative and our members are owners, Western AgCredit shares the profits of our company back to our stockholders. We share it in a term called patronage. Patronage is a form of giving back to our stockholders. On average, we have given back to our stockholders a patronage check of an average basis of 75 basis points, or 0.75%. We usually pay this out twice a year, fall and spring. In the history of us providing patronage checks back to our stockholders, we have paid over $62 million. Again, patronage checks are simply, as Western AgCredit has made our profits a cooperative membership, we pay back to our stockholders, you, the borrower, and we have averaged 0.75% back to our borrowers and a total to year to date of over $62 million. So let's talk about what are the steps for an application. Well, first and foremost, I mentioned that Western AgCredit is a part of the Farm Credit System. Farm Credit System that is established for agriculture-only lending. Let's talk about eligibility. Western AgCredit only finances agriculture. So, agriculture as in you may be a bona fide farmer, a farm-related business, or in agriculture for processing or marketing business. Currently, Western AgCredit does not do consumer home loans. However, we have teamed up with another association, a Farm Credit System, Northwest Farm Credit, that does provide consumer home loans. The documentation to start an application. To begin with the loan application, we'll need to start with a signed authorization, a copy of driver's license for all individuals, and the following financial information: balance sheets, earning statements, and expense statements. And if there's entities, we will need entity documents. When I say entity documents, think of a corporation, an LLC, a partnership. These are documents that you should have on hand and provide at the time of the application. So, smaller loans might require a little less information, maybe 1-year tax return, maybe a simple income and expense statement. More complex loan, you could require 3 to 5 years of taxes, a full analysis if it's a higher risk, challenging commodity, an expansion that might bring on more risk. We're going to require additional information. Upon meeting with your loan officer, we'll have this discussion and we'll then let you know if there's additional information needed. At Western AgCredit, we consider risk on a different level as far as the size and the scope of the amount of the loan, what it involves, even commodities. So what we also do is address the analysis as a form of a differential analysis. So smaller loans might have less requirement for financial information. More complicated or higher risk will require a little bit more information. Main thing is that we work as a team together. The loan officer, the credit analyst, you, the operator. So when we talk about constructive credit, dependable credit, it's relying upon our relationship together. When you come to your first meeting, you need to put in some hard work just as your loan officer, your credit analysis is going to put in for you. As we know, in agriculture, it requires heart and hard work. So there's some hard work on your behalf. Please come prepared. It will make this relationship go smoother. So start out with a projection, a budget. Have you put a pencil to paper? Do you know what you need to make to cover your expenses? What's your 5-year goal? What's your 3-year goal? What's your first-year goal? How is this going to work? You need to share this information with your loan officer so that together you guys can come up with a plan. Have a business plan. Understand what your entity is. If you have an LLC, if you have a partnership, if you have a corporation, who are the managers of that? Who's obligated? What are you obligated to do? What are you allowed to do? What do you have the authority to do? These are information that your loan officer is going to ask of you. Please come prepared. And understand the key ratios. Key ratios, I understand that in agriculture, you like to be out on the farm. You like to be out on the ranch. And you like to be with the animals or the crops that you're growing. And maybe you don't like to work with numbers as well. Again, that's the relationship that you build with Western AgCredit. With seasoned loan officers, credit analysts who do know numbers, if you know your business, visit with them and together you can talk about the ratios.
Hi, my name is Ben Turnbow and I work in our Logan branch as the AgExpress Division Manager. And I'm going to continue our conversation that Tara started for us by talking about projections and budgets. Whenever I look at my operation, I always like to look at a budget every year at a glance as kind of like a map to my operation. The purpose of a projection is to ultimately know the end from the beginning and a way to get there so that as you go throughout the year, you can overcome any unexpected expenses. Projections help you prepare for the upcoming year, and as you understand the yields that you're expecting, your weaning weights, your pricing, and expected income, you're able to help provide a clear path for you to accomplish your goals as you go throughout the year. Projections also help you understand what your expenses and your operating costs are going to be. Also, this will help you consider contracts and marketing and evaluate the debt service that you currently have, if you are structured the right way or if you need to make some changes. Projections and budgets also force you to think through the operation, as I said, at a year at a glance. It tests your operation's income to determine if you will meet your obligations, and it will project how much operating credit you will need and when you can repay the debt. Business plans are also another part of your operation that help you form that complete map of trying to arrive at your destination. A business plan helps you understand both the short and the long-term goals of your business for your operation. Consider these questions as well as others. What is your mission? What are your goals? And how will you market? The entity structure of your business is also something important to consider. There are multiple entity structures that we see from a lender standpoint, and it is important that you know which one to use in your business. Some examples of an entity structure that might work for your business is a general partnership, a limited partnership, a corporation, a limited liability company, also known as an LLC, trusts, or joint ventures. It is important to know that when you apply for a loan, your lender will need to know which of these entities you have so that they can understand which entity documents to get from you. Also, it is important to know who will sign and who will not need to sign on behalf of your entity. Loan officers will help each applicant decide on a case-by-case basis who needs to sign as obligors and guarantors. This list will also help provide and guide for who will likely need to sign. Primary applicant applying for the loan, those providing financial strength for repayment, and those owning and pledging collateral. As a lender, we look at multiple ratios when evaluating credit, and as a business owner, you should do the same. A way to calculate the net worth of your business is assets minus liabilities. That gives you your owner's equity or net worth. It is important to know what your net worth is so that you can understand how much you're able to borrow against your assets. One ratio that we look at in particular is called the debt to equity ratio. This ratio is calculated by the total liabilities divided by your equity. The result of this ratio will tell you some important data. If you have a debt to equity position greater than 1, it means you owe more than you are worth, and you're starting to get a little bit leveraged. The next section we're going to talk about is the procedures that we as loan officers take when gathering a loan application. As loan officers at Western AgCredit, we want to understand your loan request and the loan purpose. We'll need to verify your eligibility to make sure you can qualify for farm credit financing. Also, we will need to gather financial statements and earnings statements in order to complete the financial analysis. We will also evaluate a character analysis and then complete a collateral analysis. As we continue with the loan request, we will need to understand what loan proceeds will be used for. We will evaluate your eligibility, and then we will establish a loan term that directly correlates with the loan purpose and proposed collateral. We will also need to understand how the loan will affect your operation and your future repayment ability. The balance sheet is another area that we as a lender evaluate. The balance sheet consists of a list of assets and a list of liabilities updated with the most current market valuations. In this case, accuracy is crucial because it tells you what your business is worth at this point in time. It is also important to have historical statements because that helps us identify financial trends. Understanding ratios and financial metrics are key in order to understand that your business is on the right track. The earnings statement is another part of our analysis. The earnings statement documents consist of either tax returns or profit and loss statements. Historical earnings statements are very helpful because we can use them to reflect trends on how your business is functioning. Earnings statements also help us understand cash flow, repayment ability, and calculate debt coverage ratios. With all of this historical earnings and balance sheet information, we are able to come up with some projections. The loan officer works with the applicant to build realistic projections that are based on reliable historical average productions. Historical yields, weaning weights, culling rates, tons per acre, etc. are all evaluated. In addition, consideration for current and long-term pricing of commodities and other marketing conditions are considered. These could include, but are not limited to, weather conditions, marketing practices, supply and demand, and many others. During this time, the loan officer asks several questions to best understand your operation and evaluate the financial position moving forward. It is crucial to be realistic with projections as it provides a clear picture of cash flow ability and long-term viability. The collateral analysis is also a crucial part of what we do. There are various types of collateral that can consist of real estate, water stock, livestock, grazing permits, crops, equipment, and other items. The loan term cannot outlive the collateral that is pledged. For example, if you are requesting a 30-year term, it would not be smart for us to take livestock as collateral, as the loan would outlast the collateral in this case. Surplus collateral can lead to better interest rates. For example, if you have multiple items pledged as collateral on one specific loan, and our advance rate is significantly lower, you will have a better rate to reflect the lower risk. Personal property collateral. It is a normal policy of Western AgCredit to cross-collateralize all PCA loans and all PCA collateral. This is helpful when trading in equipment or when purchasing additional equipment in addition to the equipment that you already own. In most cases, it allows the buyer to avoid a down payment. For example, if we have a lien on all equipment, then we can use the equity in that equipment when you are purchasing a new item, so you do not have to have a down payment. Individual financing on single pieces of equipment is also available. The types of personal property that you are able to pledge as collateral consist of the following. Livestock. You can provide us with a herd list with the number of animals and their weight. We can do an inspection on the collateral, and that will be completed by either a loan officer or an individual in our appraisal department. This will help us verify the information that you've provided on your balance sheet. Typically, a loan term can be 5 to 7 years when secured by livestock. Water stock is another type of personal property. The loan term in this case can be up to 20 years. Equipment is also another type of personal property that you can pledge as collateral. In order to verify the value, a sales invoice, if purchased from the dealer, will likely be required. This will give us the year, the make, the model, and the serial number of that item. When using equipment as collateral, the loan term can typically be 5 to 7 years. Also, we can go up to 10 years on pivots. Crops, accounts receivable, and inventory are also another area of personal property that we can take as collateral. We typically take these items as collateral on operating loans. When taking real estate as collateral, our loan term can be up to 30 years. We will require a title policy. This needs to include parcel numbers. Also, legal access must be available. It is essential that Western AgCredit takes a first lien position when securing the loan by real estate. An appraisal will also be required, and the title policy will need to be completed in order to get the appraisal ordered. Water stock or water right information is also essential when taking real estate as collateral. So please be prepared to give us a copy of the certificate when pledging real estate as collateral. Also, if this is a new purchase, a purchase contract of that real estate will also be necessary. To summarize, here are a few keys to submitting a successful loan application. Communicate, ask questions, be prepared, and involve all parties to ensure they understand the loan process and objective. Through cooperative effort, the applicant and Western AgCredit works towards providing constructive credit for your agricultural needs.